Good morning, everyone. My name is Jonathan Levin, and I'm here with some friends from Bloomberg Opinion. The State of the Union is tonight, and Donald Trump will present his perspective on his performance over the past year. But has Trump really delivered on his promises? We have answers for you. Each year, Bloomberg Opinion chooses specific metrics to try to cut through the noise. And this year, we've looked at 12 data points, and our analysis is out right now at Bloomberg.com. And I'm sharing the document as it looks up here, and we're going to try and go through the key points that our columnists make this year, and focus on some of these fascinating graphs here. I want to encourage you all as we're going through this to please send in your questions, send them in as soon as possible. And if we can, we will address them here on the stream. Also, just a heads up, we're going to have another stream tomorrow morning at the same time with our colleagues in politics to give an analysis of what actually went on in the State of the Union. But without further ado, let's dig into this project here with my colleagues Justin Fox and Allison Schrager. So, guys, our package this year opens with a piece from James Gibney on immigration, and I don't want to get too deep into the nuts and bolts of this, but it's going to become relevant to a lot of the other discussions that we're going to have here on the economy. But just to run through what the key points that James makes here. He makes the point that Trump came into office promising, quote, the largest deportation operation in American history. And I want to go down to the excellent graphic here, the lead graphic in our package. And what it's showing is that, as James finds, it's very hard to get a lot of transparency as to exactly what's happening here. The Department of Homeland Security reported 622,000 deportations under Trump, which is actually less than the 778,000 in the last fiscal year of the Biden administration. But DHS is not providing a detailed breakdown of exactly what that means. So James finds that it's just really hard to do an apples to apples comparison here. I'll give you James's sort of kicker, though, his TLDR, if you will. James says, there's nothing, so there's this question about are these numbers real? How should we take them? And James says, there is nothing fake, however, about the anguish and outrage triggered by the killings of two U.S. citizens, Renee Good and Alex Preddy, at the hands of federal agents in Minneapolis in January. ProPublica has also identified more than 170 incidents in which American citizens were held against their will. So there's a very human element to all of this. And there are also, some intangibles, some complexities here. Even where people are not being deported, there's the chilling effect that is really seems to be affecting the numbers of people crossing the border. So with that, I want to move on next to an area where I think there's going to be room for robust debate on this panel, and that is what has been going on with jobs and the labor market under Trump 2.0. And I wrote this up. I wrote up the blurb this year on this. And the deal is that Trump, on the campaign trail, he was talking a lot about, this sort of industrial revolution that he wanted to create. He said he was going to create, quote, millions and millions of jobs. And here I find that the figures are pretty transparent. It's not happening. Not yet anyway. Last year's official payrolls growth from the Bureau of Labor Statistics is currently marked at 181,000. And that compares to 1.5 million in the last year of the Biden administration. And prior to that, the numbers were even higher. That payroll growth was really cooking.
And Christopher Waller was saying yesterday, the Fed governor, that he's still convinced it'll probably end up being revised to negative.
Yeah, thank you for that. These numbers are very much in flux. Now, there are other ways to look at and think about what's going on in the labor market. People aren't losing their jobs per se. There aren't a lot of layoffs. People are still getting raises, but recall that, in the United States of America, you look for a certain amount of momentum in your real wage growth to really feel good about things. At the moment, real average hourly earnings came in the December through December period in the first year of Trump 2.0 at a plus 1%. That's basically the same as the average in the final year of the Biden administration. We can also look to unemployment for sort of a bottom line. I think it's particularly important to look to unemployment to the bottom line, because those payrolls numbers are affected by labor supply in addition to labor demand. So that's where the immigration question comes in. Unemployment ticked up to 4.3% from 4% at the start of the Trump administration. So that seems to be telling us that although labor supply is a big part of the story, labor demand is weakening at least a bit here. So, like, Allison, putting it all together, what do you make of this? Has Trump delivered on his lofty promises of a revolution in the labor market, you think?
Well, he might have. Well, I don't know if he did, but we might be having a revolution in the labor market. Like, it's interesting you bring up industrial revolution, because we might be having a new labor revolution. I mean, we keep getting all of these like doomsday reports from all these AI people convinced that anyway, they've never done our jobs. They know what's involved. And so they will soon be displaced. And that there was that wonderful, was it Substack post that came out arguing that demand was going to completely collapse because of this. So there is something, we actually there's no data to support that AI is doing that much with the labor market yet, but our wheels are spinning of this huge change that is to come. And honestly, we don't know. So Trump, in the meantime, in the midst of all of this, seemed to promise would bring manufacturing jobs back. So I think that is the promise that really kind of was let down, that in the midst of this major or maybe not. I mean, I don't know if you guys saw Jason Furman posted what we can expect a change in productivity poll amongst economists. And most people actually expect, economists at least, and no one listens to us, expect that this change in productivity will be similar to other innovations. But if you listen to the AI people, soon we will all be living on welfare. So in the meantime, Trump is promising to bring back the economy of the 60s, where we're all working in factories doing physical labor. So that did not happen. Actually, and the AI promise has not been fulfilled yet either. So right now we just kind of have this mad labor market where no one really knows what to expect, where no one's really hiring, but no one's really losing their job. Although on the AI point, I think what we're expecting to keep seeing, and we're not seeing yet, is this huge drop in hiring in AI intensive industries. And we're seeing a bit of decline in hiring in software, but not other jobs that you would expect AI to displace, like law school people, associates, whatever they do, and financial analysts, all these sorts of like knowledge jobs. In fact, those are areas that actually are hiring. So it's a really interesting thing going on. We might be having a revolution, we might not, and yet we have a president who wants to go back to the last revolution.
Okay, so putting it all together here, we have a president who, in many ways, likes to overpromise. He certainly did some of that when it came to the labor market. But there are a lot of doomsday predictions out there about AI, and in the face of that, the unemployment rate has only ticked up to 4.3% from 4% at the start of the Trump administration. So your TLDR would be here, not so bad kind of thing. Is that your point?
It's a good labor market. I mean, I don't put a lot on the president. I don't put a lot on any president usually around that. But yeah, it's not bad. I mean, I think one thing I was very concerned about at the end of the pandemic was how many men had left the labor force in past recessions. And a lot of people left the labor force during the pandemic. And it's actually good, particularly, especially because it's been this long running problem, that people have largely come back, men and women. So usually you just lose a ton of men in every recession and they never work again. But that doesn't seem to have happened. So that actually would have been more under the Biden era. I think that's largely, I think we're still sort of seeing some of these after effects of a very weird pandemic labor market. And I think some of the quirks we're seeing, particularly slowing and hiring, might still be from an overhiring from that. But yeah, I would say in all, it's a pretty good labor market, not what Trump promised, but not bad either.
But Justin, how does this labor market feel to people who are on the outside looking in? Either folks who unfortunately have gotten laid off and are trying to find their next role, or folks who are graduating from high school and college and trying to get a foot in the door. How does it feel to them?
And it's definitely been tough for people in their 20s. Their unemployment rate has gone up. And for a while, there was this intense focus on the fact that it seemed to be going up faster for the college graduates than the non-college graduates. And you look at it over the past 6 to 9 months, and there's really no trend there at all. And in fact, more generally, it just doesn't, something seems to have shifted since the middle of last year, although could be noise, where this concern about, like, as Allison was saying, these sectors like computer systems design and related services, which is this big job category in the payroll numbers that had been just hemorrhaging jobs since 2022, stopped a few months ago. Whereas there's signs that at sort of other lower paid parts of the labor market, things are struggling. One thing that Trump has definitely done to the labor market, because you can just see it in the numbers so clearly, is he has increased the unemployment rate for native-born workers and decreased the unemployment rate for foreign-born workers. And that actually is kind of
not as advertised.
No, but it's actually entirely predictable from almost all economic research on the impact of illegal immigration in particular, including by George Borjas, who's in the administration, which is basically that the people who are harmed by lots of low-wage immigrants coming into the country are low-wage immigrants. And native-born Americans overall tend to benefit. And so you've sort of stopped the flow of new people and deported a fair number of people and left a lot of others kind of afraid to go to the work. The ones who are still, answering survey questions are more likely to have a job than before.
Yeah, that's the kind of nuance that you don't get in a campaign speech, I feel.
Right.
Okay, so
for non-native born who answer the survey questions, they all, like, I assume, have like visas and are legal.
Right.
Mm-hmm.
Yeah, I mean, that's one issue, is just this changing in who tells the Census Bureau every month whether they're born in the US or not, because there was this big drop. And because of the way the numbers are put together, that shows up. It will until next month when they revise the population numbers. It's been showing up as this huge increase in the number of native-born workers, but that's completely fake. The unemployment rate among native-born workers has actually gone up.
Is this CPS?
What's that?
This CPS?
Yeah.
Current population survey? Are they still doing that in person?
To some extent. I mean, they sort of build a relationship and then they keep checking with you. And I think some of it's in person and a lot of it's on the phone or by texting or whatever.
Once I was in my lobby and someone from CPS was there interviewing my neighbor. I was so jealous. I'd love to be in CPS. And sorry.
We should all be so lucky. All right. Well, so jobs and the immigration question have definitely been top of mind when people think about how their politicians are doing. The other thing that is clearly top of mind is what they call in the political sphere affordability. A lot of times when we talk about affordability adjacent issues, we're talking about inflation on streams like this one. So let's move on to the affordability question. And this is a part of the package that was written by Candace Zacharias. She looked at what has gone on in the reported inflation numbers. And here are the TLDR. I'll give you a direct quote straight from Candace. She says, if frustration with inflation carried Trump back to the White House, frustration with prices haunted his first year and will be pivotal in November's midterm elections. Let's actually unpack this, though, with the numbers. So first of all, she's going with the consumer price index. There are a few ways to look at this. The Federal Reserve happens to prefer the personal consumption expenditures deflator, the personal consumption expenditures price index. But here we're focusing on CPI. You get similar pictures. CPI is up now 2.4%. From a year ago. And if you had just taken the same exact data point in January 2025, you were looking at 3%. Seems like an improvement. There's sort of a talking point out there that like, hey, alarmists told me that the Trump trade agenda was going to push up prices. I see headline inflation down, so I guess it was just a lot of scaremongering. I tend to think that that's an oversimplification, and the way we want to think about it is, where is inflation now versus where would inflation be in the counterfactual in which we hadn't done shoot ourselves in the foot sort of tariff policy. And there are a few ways to think about this. John Williams at the New York Fed has an estimate that tariffs add about 50 basis points to headline inflation. That's, I'm sure, a rigorously modeled estimate. I think if you just, very simply look at the contribution at the moment from core goods to overall inflation, it's like on the order of 20 or 30 basis points. But so it's whatever estimate you use, it's pretty easy to say under the counterfactual in which we hadn't done tariffs, inflation would probably be even lower. So Allison, I'll go to you. Do you think Trump's done a good job on inflation here? What do you think?
Well, I mean, the tariff thing is interesting. I really would have thought inflation would be much higher, because even if you do look at the areas and where you'd expect tariffs to be showing up, like apparel, a lot of durable goods, like we're just not seeing that high an inflation number. And, I'm not convinced that inflation would be back to 2. I think there's a lot of structural reasons why we just have higher inflation. I don't entirely blame Trump for that. I think they were just changes to the economy, deflationary forces in the 2010s that just aren't there anymore. But yeah, I mean, I think inflation, might be, adding, I don't know if I'd go 50. I haven't done the rigorous work John Williams has, but I'd probably, my gut feeling is like maybe 10, 20 basis points. I think as well, like Trump might be also not helping inflation with his relationship with the Fed, which, is a big part of inflation expectations is, independence of the Fed makes people feel more secure that the Fed takes inflation seriously, and that brings down expectations. And economists tend to assume inflation's like a self-fulfilling prophecy. What expectations are is what inflation is. So I would love to see, I don't really have the skills anymore or the bandwidth, someone to break down sort of how much is coming from tariffs versus how much is going for sort of this breakdown in Fed relationships. Of course, Kevin Warsh, we'll see how he does. He claims he's going to be, he used to claim, I'm not sure where he is right now, that he will be more laser focused on inflation compared to Jay Powell, who made the decision to become much more focused on the labor market and give that more weight than inflation. And that was part of the problem we had in 2020, 2021, and are still living with. So in the end, Trump's legacy by nominating Kevin Warsh, depending on how he chooses to perform, could be to get the Fed back to having more control over inflation or not. We'll see.
Yeah. Justin, I'd love for you to weigh in here. And just another point I want to throw out here too. There were some categories, specifically housing, that were affected by the recent government shutdown. There's some expectation that the housing inflation contribution is going to pop back up in the April report that's coming down the pike. So what do you make of all this, Justin?
Well, the first thing is just that I think a lot of people who were frustrated with the big wave of inflation in 2021, 2022 wanted prices to go back to what they were before. And I mean, that in general, economists go, no, don't do that, because there are all these sort of knock-on effects to that can send you spiraling into a recession or depression. But Trump came into office saying he was going to fix it. And I think a lot of people just assumed, okay, everything's going to cost what it did in 2019. And so that's setting yourself up to disappoint everybody. So, overall, inflation's been fine. It'd be nice if it goes down a bit lower, but it's not a big problem anymore. I guess another thing is there's been this huge tailwind from falling gas prices that seems to have kind of stalled out, and depending on what happens with Iran right now and Middle East in general, could reverse and then prices will go back up, which will be great for the Texas oil industry, who Trump also came into office saying it would help, and they've had just an awful year, but would keep, put this pressure on inflation numbers that hasn't been there. And then, with housing, the rents in a lot of places, especially in the Southeast, have really moderated and in some cases come down, but there's still the purchase market still seems to be really stuck. And I don't know that it's partly that prices aren't coming down because people don't like to lower the price they're asking for their houses, but that's this other thing out there where maybe it doesn't show up in the inflation numbers, but it feels like an affordability problem.
Yeah. Okay. So this is a great segue here. We actually have a question coming in from TikTok, and I want to encourage other people to send in those questions as well. They say, how would inflation be affected by an extended conflict with Iran? While we're on the subject, I also want to transition over real quickly to Liam Denning's piece, which touches on energy costs. And I'll real quickly give a blurb from Liam. Liam points out that Trump missed his year one promise to have energy costs and get average prices below $2. This is again, though, it's one of these sort of like wild promises that Trump threw out there on the campaign trail.
Yeah, it's sort of the conclusion of Liam's piece is Trump's promises were totally ridiculous. It's like things have been fine, but
exactly. Yeah. If you promised a little less, if you said, I'm going to get gasoline prices down. Okay. He has actually done that. And we could debate how much of that is policy, how much of that is, the energy markets are a wild place, but gasoline is down by 7% since inauguration day to less than $3 a gallon. That's the bottom line. Here we have new questions coming in the form of the threat of new conflict with Iran. What does it all mean, guys? Allison, what does it mean that we have another potential energy shock, big or small, on the horizon?
Well, it's hard to predict, but odds are, if a conflict could increase the price of energy. We really aren't importing a lot of energy from that area anymore. We produce a lot of our own, but prices are set in a global market. So even still would expect a fall. an increase in energy prices. And I mean, as we were just saying about inflation, if you look at total inflation, a fall in energy prices has been one of the things that's really contributing to the lower inflation costs. So that's another thing that could produce, a big jump in, especially if we have a big global jump in energy prices, that really, I think every country is sort of having some spots of weakness lately. And it could really sort of cause a lot of economic damage, but, we'll see. On the other hand, Iran isn't exactly selling a lot of energy
Right.
to countries in the sort of, I mean, they're selling energy, but not to countries actually, no, they sell, Justin, do you know that they sell a lot of energy to China, I guess?
Yeah, China and then Russia, obviously. Well,
Yeah.
although Russia's got its own, but yeah.
Yeah. So, I mean, it could show up in our trading partners, certainly that way.
Right. All right. Well, so send in those questions. We appreciate that question from TikTok. Moving along. So here's an area where we have our writer, our expert on the line. I want to talk about about crime, the plummeting murder rate. Justin Fox wrote about this for us. So Justin, I'm just going to let you present your piece. But who gets credit for the plummeting murder rate and some of the other positive things that are happening under the hood of the crime statistics?
Well, I mean, to start with, whoever's president gets credit when things are good, and on crime, things are great. Crime is just plummeting. The whole frightening sort of rise in crime that began with murders early in the pandemic and then sort of spread to other things, it's gone. It's in the past. I mean, we still have deodorant behind lock and key at the Walgreens, so there are some leftover consequences, but it seemed like these decades of progress on crime were being reversed. Now we're sort of back on the trend we were before. And that's great. And we can get into whether President Trump has played any role in this, but it's like when you're president, you get to claim credit for things. These are these metrics. We set up the metric at the beginning of the year. He has beat all the metrics on crime. So yay, crime is down. And one thing that's kind of striking is a couple of things, mainly the rate of aggravated assaults, the decline, because crime is going down already, but aggravated assaults, there's been clearly this shift in the trend, and that affects the overall violent crime rate because it's the most common violent crime. And that it started in November, basically, on Election Day. And why that is, we can go into a little. Well, actually, so why would that be? What could have changed that? Well, Trump's main crime priority, other than pardoning lots of criminals, I mean, he's been pardoning at a rate never seen before. And most of them are white collar criminals, but there's a bunch of people, like especially January 6th types, who've gone back and committed other violent crimes since then. But, really his main law enforcement thing has been this whole deportation wave and much more aggressive immigration enforcement. And, at some level, immigrants overall, we know, are much less likely to commit crime than those of us who were born here. It's less clear with immigrants who are here illegally. It's partly just hard to get the data, and also it might be really different for different groups of people coming here. And it might be that a lot of the people, say, from Venezuela, and that's been an obsession of Trump's, that maybe we did get a lot of criminals from Venezuela. So, cracking down on that could have some impact. I still think that my impression is one of the main impacts has just been that if you're an immigrant and there's any sort of uncertainty about your legal status or those of the guy who punched you, you are much less likely to report crimes to the police now. And I think that was very clearly seen in Chicago when they had the whole ICE crackdown there, that people just stopped calling 911. Because even though the Chicago police weren't really cooperating with ICE, there was still this fear that would end up. So maybe partly what we're seeing with aggravated assaults, because most aggravated assaults are people who know each other, maybe we're seeing some reflection of just fewer being reported. On the other hand, murders all get reported and they're just plummeting everywhere. They're plummeting in places with lots of immigrants, plummeting in places with very few immigrants. I don't have a great explanation for it, other than sort of got this momentum going. And also a lot of crime-prone people got killed over the past few years, and a lot more got thrown in jail. So I can't fully explain it, but it's really great. It's great to see, and it just seems to be continuing at a really rapid pace. A lot of cities are seeing fewer murders than they have in many decades.
Yeah. And when did this trend get underway in earnest? You can sort of see it on your chart. It looks like it peaked in
so murders came first, and they peaked in like the summer of 2021, sort of plateaued for a while and then started falling. But yeah, most other things like violent crime overall, it was in the middle of 2022. And then property crime has had its own weird thing because basically during the pandemic, everybody was home. So burglary, which is one of the most common ones, dropped a lot. And then, pickpocketing, nobody's out to be pickpocketed, or other thefts. So property crime dropped, then rose, and now is falling again. And right. Property crime, burglary in particular, has just sort of disappeared, residential burglary. And one theory now of why it's accelerated even more is that more people are working at home. So you have sort of eyes on the street in residential neighborhoods that weren't there before. I think on the flip side, there's a lot more people trying to scam us online all the time and often succeeding. And that just doesn't show up in this data at all. But it's kind of more invasive to have somebody come into your house and take something. And that used to be this huge problem in the US, and it's just not anymore. Unless you're a pro athlete. That's apparently, there have been these waves of when people are off on road trips, people going in and stealing their stuff in various cities, but that's about it.
Yeah. But so we're saying that when it comes to immigrants reporting, some of this may be an artifact, much in the way that some of the labor market data
right.
is affected by the chilling effect.
I just don't think it's that much of an artifact, just because the murder, we generally find out about murders, and they are showing this looks accelerating, continuing, and even accelerating decline.
Yeah. Allison, I saw you.
You mentioned like more people in prison. There was this trend of decarceration. Has that reversed?
It did slightly. The numbers come in really late on that. But partly what happened is there were just tons of people released from jails and prisons early in the pandemic because they were afraid of, we're going to have epidemics, everybody's going to die, let's just let them go home. And so if you just look at the trend line, it's continued to be downward from before the pandemic. It's just that it dropped a lot in 2020 and 2021 and rose a little. And crime rose, so you'd expect more. But I think in general, the concerns that it was, DAs who were reformist DAs were causing the crime wave. And a couple of them were voted out. So, but I think in a lot of cities like Philadelphia, New York, Manhattan, at least, where they're still in office, that just does not seem to have been a major driver of what's going on, at least not with violent crime. It might be on sort of petty crime, shoplifting level.
Well, do you also think, one thing I've observed is that because things aren't prosecuted, they're also not reported. Like I have a friend who was a victim of a felony assault, and the police were just like, we're just not going to pursue this. So it never really was reported.
That's possible. And one thing I will say is with the assault numbers, New York is this real, overall assaults didn't go down as much haven't gone down like other things, and are still, I think, a little higher than before the pandemic. New York City, they're still massively higher. And if people are being discouraged from reporting, it could be even worse than that. So that's one part of the crime picture that could actually be worse. I always go back to the murders because we kind of know that's not the problem there, and they really have plummeted. One thing, the Council on Criminal Justice had this kind of dodgy chart from a book that I don't agree with the way the guy did it, that showed that this year might be the lowest since 1900. I think that's sort of comparing CDC numbers with current FBI numbers, but it's pretty close. And again, that's partly because hospitals are a lot better at treating gunshot wounds than they used to be, but it's still the decline over the past few years. That's got to be real. And I think that means that the declines we're seeing in other crimes are probably mostly real.
Yeah.
Interesting.
Well, this is a great section. I'm going to try and pick up the pace a little bit here because this is such a massive package, and I encourage everybody to go to Bloomberg.com and read it for yourself, because I'm not going to probably do it a justice in the final 10, 15 minutes of this stream. But anyway, I want to move along. Speaking of not doing the material a justice, I'm going to sort of have to skim real quickly over Lisa Jarvis's excellent section on health coverage. She finds in a nutshell, and here is the graphic that Trump sort of gets a freebie on this one. The rate of uninsured Americans remained at a near historic low in 2025, but basically it's too early to judge. Lisa writes, "Make no mistake, major policy changes will likely cause those numbers to surge in the coming years." Definitely worth your time to read. I want to move on now to trade, because this is in the news big time. I'm sure everybody has an opinion about what's going on here. Bob Burgess wrote this section. His sort of subhead is "Trade had its wildest year ever," and the point is that, like, if you look at Bob's chart of the U.S. balance of trade in goods and services, it doesn't look like much changed, actually. But that is an understatement of all the wild swings that happened over the course of the year. So, first quarter, you actually had a massive trade deficit because there was all this front loading that companies were doing. They were saying, oh my God, tariffs are coming. I'm going to buy a bunch of stuff. I'm going to import a bunch of stuff. Second quarter, you actually get some normalization. Towards the end of the year, you see sort of a collapse in the trade deficit, but it's much more complicated than meets the eye. Part of what's happening is foreign accounts repatriating precious metals, not exactly a good thing. And here, as if all those wild vicissitudes weren't enough for all of us, we just had the Supreme Court weigh in on the IEEPA tariffs, which were basically prefaced on the notion that Trump had the right to unilaterally do tariffs under the auspices of a national security emergency. The Supreme Court came in and said, no, you can't do that. And then Trump then turns around the very same day, I believe, and says, I'm going to use another tool. I believe it was 122 tariffs. Do I have that number right? And he puts them right back on. And so everybody's like, what is going on here? It doesn't seem like the trade balance has changed in a durable way yet. Allison Schrager, have we achieved anything durable from all this craziness, or has it just all been for, I don't know, the sake of the drama of it?
I made a prediction in December that 2026 things would improve because we'd finally have some certainty around tariffs, and that turned out to be wrong. I kind of figured I kind of expected the Supreme Court to overturn them, and I naively thought that would bring clarity. But in fact, it's brought the opposite. I think just no one really knows what to expect. And I think we're being naive if we think, oh, well, when Trump leaves office, we'll go back to trading a lot. I think to some degree, we were even seeing a pullback in trade even before this term. We're seeing it in other countries too, more sort of friendshoring, less trade. I think the world is sort of doing a pullback on globalization in general. So I think Trump is more of a symptom of sort of feeling a little fed up with that. Anyway, I'm a fan. I think a lot of other people aren't. So I think I'm anticipating now 2026 might be a little rocky as the Trump administration is trying to figure out a new way to implement tariffs. The good thing is it now does seem that there's at least a ceiling on the tariff. And I guess expectations matter, or framing matters, because was it 2 years ago I would have thought 15% tariffs is crazy, and now I'm like, yeah, it's not so bad. We can survive that because we've gone from 2 to 15, and now, but at some point I thought it could be 50. So framing matters. So I think on the one hand we're going to have a lot of back and forth of how these are going to go, but at least now there's a ceiling, and they can't be sort of imposed willy-nilly, and have to be imposed on all of our trading partners, which I don't love, but like at least there's a little bit more certainty there. But I have a feeling this is not gonna like sort itself out anytime soon, if ever.
All right. So I gotta hustle, but the next section is also tariff related. And so this is Clive Crook's section on what's happening with the deficit. And Clive's headline was "Tariffs won't solve the deficit problem." The problem here, like even if you were, for whatever your reasons were, even if you were bullish on the revenue that tariffs were raising before the Supreme Court ruling, tariffs were essentially used as the political offset to the extension of the Trump tax cuts. And so you say to yourself, are we really moving in the right direction here? It seems to me that the bottom line is that the United States still has a massive deficit problem. It's next to impossible to imagine a scenario in which we are meaningfully slowing the expansion of the national the national debt, unless you can convince me that we are on the cusp of a productivity miracle. And
well, so the main thing that's been, more than the tariffs, the main thing that's been shrinking the deficit, which you can see on the chart over the past year or so, has been rising income tax revenue. And which is caused to a large extent by rising inequality, which I think, are we going to talk about that next, or is that coming in a little bit?
Oh, that's Allison's section, but I
exactly.
appreciate the segue. Yes.
That's all I had to add. That was my attempt at sort of, let's get to Allison's part.
Okay, I love it. I tell you what, let's use that segue, and let's get there in a jiffy. I just want to say real quick, just to stay chronological here. We have a section from Nir Kaisar on the stock market. The bottom line is that the stock market continued to do well in the first year of Trump. It's doing less well in the second year, and we're gonna see how that
and it's doing out. Less well than just about every other major stock market, right?
Absolutely. And in addition to all of that, that's another good segue into Allison, because a lot of what's happening with inequality basically comes down to the balance of what's going on in the stock market versus what's going on in the housing market. So, Allison Schrager, what is going on in inequality in the United States of America?
Well, the first Trump term was actually pretty remarkable in shrinking both wealth and income inequality. We had lower earners get significant pay raises for the first time in years. And we also had like a significant increase in housing wealth. Now, so lower earners, if they own anything, and a lot of them don't own anything, they do tend to own real estate. They don't tend to be in the stock market as much. Only 60% of people own stocks, and that's very tightly correlated with income. So if you see housing go up relative to the stock market, you're going to see a narrowing of income inequality, and that's what we saw. So as you can imagine, this last year, the value of housing has kind of been middling at best, even falling in some places. But we've had, or at least last year, a big boom in stocks. So it's important to realize that all income groups, so I looked at income, wealth by income, just because I feel like that's more informative than just looking at just wealth. And you do see this sort of widening really for that reason. Mainly because, as I said, lower income people don't have as much assets, but it's important to realize that every group did see an increase in their net worth. So this is wealth minus debt. So it is capturing people being in more debt. So we did see an increase for every group, and that's good. But we saw a much bigger increase for high earners, largely because riding the wave of the stock market.
I gotcha. Okay. And so like we have some proposals out there. I guess some of them are more than proposals. There's this idea of Trump accounts, right? Which in theory is supposed to increase stock ownership across a broader cross section of the US population.
That is literally what it does.
Yes, it's happening. It's happening.
Yeah, I mean, it gives particularly lower income people access to assets they weren't really having before when they're young. Puts people, when you're born, you get an account and invest in the stock market, and then when you turn 18, you can do all these things with it. So that would directly diversify asset ownership, particularly with lower income people, and which is good because, they probably overexposed to housing. But I think, it's a drop in the bucket. I mean, you have very sort of rich people getting a lot richer. And it's good when the stock market wants to go up. I mean, we could have had a collapse in wealth inequality if the stock market tanked, and that we don't really want that either. Right. So, but it's a small step, I think, towards diversifying wealth and holdings, and it maybe will get different income groups more used to owning stock, feeling more of an ownership in the stake in the economy. Even if they're small, it's a step in the right direction, but we'll see how it goes, particularly when people turn 18 and seeing what they do with that. Do they cash it out? Do they keep it? I mean, we don't know. We've never done anything like this.
And then on housing, there's this pickle, of course, because housing is the primary asset, especially of the non-rich, and so you want housing to appreciate. But if housing is appreciating a lot, it's also not becoming any more affordable, and not giving housing access to people who are on the outside of the housing market. Like, as a policymaker, are there any levers that you can pull on there, or?
Not much. I mean, this is a sort of where we are in this housing affordability crisis to begin with. Is on the one hand, this is people's primary asset, particularly lower earners. If they own anything, it's housing. But if we want to make housing more accessible, we have to make it cheaper. So we're sort of, in this tough spot of, homeowners versus aspiring homeowners. One thing we could do, everyone just immediately goes to, we need to build more housing. And yes, I agree with that. But I think we get a little too over-focused on that because it's not the answer to everything. Part of it is we need to be more thoughtful about what housing we're building, because there really is a real dearth of starter homes. And part of it is what we were talking about last time, is that, higher income people are demanding nicer houses, and that tends to be what gets built. And that's also what's competing and building up prices. So maybe if we built out more of a sort of starter home market, then that would not only make housing more accessible to lower income people, but would also maybe not compete in the same segment of the market of what so many people are dependent on for so much of their net worth.
There's an interesting TikTok question about housing: what's going on look anything like 2001 to 2006 in terms of housing prices? And I have my thoughts, but you answer, Allison.
I mean, I don't know about, not prices, because they're not inflated like they were. And we also don't have all these issues in the housing market. You don't have.
It's still hard to get a mortgage compared with then.
Yeah, you don't have all these people putting like 2% down and are completely over levered.
Right.
I'm curious what you think.
Well, I mean, it seems like if like Jamie Dimon was bringing up 2008 yesterday, and if I sort of doubt we're going to have that happen again, but if there's something going wrong where people are borrowing money in things that are going to go down a lot in value, it probably won't be the housing market. It'll be something else this time.
Yeah, and that's a really, I think, important point that we should dwell on. Anyway, we're running out of time, because if we are in this bubble that's about to collapse, like last time, as they say, this time is different. Last time was really bad because it hit households so hard. Yeah. And now, because they mostly own housing, and that's not necessarily in that much trouble, that even if we have a big stock market crash, which would be bad, it probably won't be as deep a severe recession as 2008 for that reason.
Right. Yeah. Like the collapse of the dot-com bubble. It was
Yeah.
a tough labor market for a few years after that, but it was. One labor market inequality question is, I was just looking at the Atlanta Fed wage growth tracker yesterday, and I was kind of shocked to the extent with basically for a while during and after the pandemic, low wage workers were seeing by far the biggest gains. And that has completely flipped over the past year. And low wage workers are seeing the smallest gains now. Any thoughts on why that's happening? Either of you?
I got nothing.
Okay.
I got nothing.
I mean, yeah.
Yeah. Listen, I got to try and take us to a close here. So let me quickly let me quickly run through just the rest of the package. Mark Gongloff's section is really absolutely worth a read. It's fascinating because, as he says, clean energy is still sort of winning despite overt efforts to try and crush it. Like this is an area where the administration's rhetoric is all going in the other direction. But as Mark points out, in spite of that, the U.S. actually gained a little ground on China in clean tech investments in 2025. So really interesting, absolutely worth your time. I did just want to kick our conversation. I wanted to finish up with Nia Malika Henderson because this sort of brings it all together. It's the bottom line. If this package is meant to be a scorecard for the administration, Nia Malika Henderson's piece is sort of about the scorecard that the American people have for the administration. And according to the American people, things aren't going swimmingly. The president's rating has sunk to 37%, close to his all-time low of 33% in the wake of the January 6 attacks on the U.S. Capitol at the end of his first term. And that's according to the most recent Quinnipiac University poll. And so there you have it. I think a lot of the things that we've talked about here are driving those popularity numbers. Obviously, the immigration policy, the optics of what's gone on in recent months around that, the fact that, as Justin pointed out, people had very high expectations for resolving the affordability problem, perhaps unrealistic expectations because prices were never going to come down. Inflation could cool and could continue to cool, but prices are not coming down, at least not in an innocuous scenario. And although all boats are rising to a certain extent, I think people, when they see growing inequality, that doesn't exactly make them feel great about the world either. That's a great place to leave it, I think. I want to thank very much Justin Fox. I want to thank Allison Schrager. And I want to remind you all, we will have State of the Union analysis tomorrow at 8:30 a.m. Eastern Standard Time. And that's going to be with our colleagues Sarah Green Carmichael, Nia Malika Henderson, and David Drucker. That's it for us. Thank you very much. And please check out this awesome piece. There's a lot that I really just skimmed over. There was simply not enough time to go through all of it. So check it out at Bloomberg.com. Thank you.
Thanks.